polynomial is an amazing indicator, but it is limited to 4 probabilities. One is the best for you. It's a V shape, immediately getting into the trade, and it works out in your favor. The next of the 4 probabilities is double top, where it seems like it's working out, but then comes down and retests. Next probability, and it's a little bit worse than the double top because it's a head and shoulders, and either price goes a little bit higher or lower, making the head of the double top or double bottom, and then even a shoulder. This consolidation takes a lot of time. Or the last one, where basically you can't do anything and it goes parabolic against you. And even though the polynomial is absolutely brilliant at showing you this low, you can see that the movement was very lackluster. The movement here was amazing, but maybe you didn't take your profits and it came right back down to where you started. Or even here where it went lower immediately. The one we all love, V-shape. And so I'm asking you today to consider the time movement that these probabilities will happen and what you'll need to do to apply this risk factor to your trading system. Because potentially once out of 4 times, you'll have a real moneymaker, but 3 of the times you won't. So when considering reversal patterns and price comes into that polynomial, you don't know if it's a double top right here or not. You just know that you're up against resistance. If you enter into the trade and start using a trailing stop lower, you wouldn't make much money because price would get you out fairly quickly. If you let it ride because you have a stop loss higher, this would be a good option for a double top as long as you have enough option time on your expiration because price never got up into that, and so your trade was safe, making only profit. Now, if price came up into the polynomial on a head and shoulders and you entered into the trade, it would look just like a double top. If you applied a trailing stop, you would immediately be taken out, losing your money. If you applied a stop loss, you would also be taken out, losing more money. And this trade's very hard because it takes an extreme amount of time before doing what you wanted to, and that's for price to move lower. But it's very hard to determine from this one resistance level on the polynomial. Now looking at a rising wedge, if we were to see price come up into this resistance level of the polynomial, we would think this is a great place to enter into the trade. You start applying your trailing stops and you're quickly taken out. Seems like trailing stops haven't worked in any of these scenarios, and it just touches and gets you out before the trade goes in the right direction, making somebody a lot of profit. As you can see here, a wedge formation where it keeps going a little bit higher after touching perfectly at this resistance level, causing a lot of time decay on your option until it goes into the right direction. Even here, we see that the candlestick touched the polynomial, went up a little bit, and then came back down, retesting, which was lower than your entry, making a little head and shoulders pattern before going to the midline or back to horizontal resistance. If you got in here, this trade took 20 days going straight sideways before it broke out. Same thing happened here. Over 20 days of price just moving sideways before selling off. Make sure you have enough time on your expirations. Price touched here 15 days before it finally went higher. Even consider this, price touched 25 days later, moved over 30%. That's over 1% a day, which is really good. Price touched here, and over the next 20 days, only move 11%. And that's why it's good to calculate before you get into the trade what your potential profit would be. Not all trades are equal. Perfect entry, 32% in 10 days. V-shape, I'll take every one of them. But just like the last one that hit this upper resistance band, instead of it making a perfect V-shape recovery, it went sideways for 35 days. It's hard to make money that way. You might have to consider, if you got in here, maybe doubling down at a higher resistance level. Or maybe a pattern of head and shoulders, giving you more time on the trade to complete. One thing to consider is, instead of taking the first resistance or support area on a polynomial, wait till you have a confirmation of 2 touches, because on a double top, this would have had no problem making its profit, even with the trailing stop lower. Head and shoulders, you'd have a problem with the trailing stop, but not with the stop loss as price went lower. And of course, you'd have a problem with the rising wedge trailing stop, but probably not with a stop loss as price went lower. Same holds true for bullish trades. You'd wait for that double touch before entering. Kind of like here, we have 2 touches, then price shoots up. Here we have 2 touches, price shoots up. Spread out a little bit, price touches the resistance twice and falls off. Price touched twice and fell off. Price touched twice, then went in the right direction. Again, it touched twice, going in the right direction. This saves you time and money.